my commentator today as we're going to be talking to one of the best tax strategists I've ever met in my life. Mike, how are you?
I'm doing good.
All right. And Michael, how are you? So Mike and
I'm
Michael.
good.
So
I'm
it's the
good. You
Mike and
got two of
Mike in
us.
the
All right.
morning show
But
today.
this dovetails perfectly into my business winning tax solutions because I don't do any kind of prep work. I do all the representation work, but Michael does the prep work. So that sounds like a good combination to me.
100% as we kind of dive deep into this topic and get rolling into specifically enough what we're going to be covering today. As I'm pulling up my screens, and go figure when we have these conversations. There we go. All right. So, our topic today with Michael August of Rainstorm Group is the basics of Section 179 and bonus depreciation. The goal today on the Mike Velarde show is to educate listeners on Section 179 and the bonus depreciation. So let's go into it. So, Michael, what exactly is Section 179 and how does it work for business owners?
Section 179 is a section in the IRC code. It's been there since 1958. So it's been there for what, 7 decades now? And most recently, it was affected positively in the One Big Beautiful Bill Act. Specifically, you can buy certain types of machine equipment, even software, computers, other things. But for the purpose of our conversation, we'll focus on equipment and machines. And what happens is if your purchase qualifies under Section 179, which our program and its assets do, you can write off that entire expense and accelerate and fully depreciate it in the year that it's bought and put into service. So currently, the cap was raised from 1,250,000 to 2.5 million maximum if you are married filing jointly. That is a huge, huge write-off for certain people, and oftentimes it's just overlooked.
So, Mike, are you familiar with Mike Velarde, or we'll call it Mike Velarde. Are you familiar with Section 179?
Oh yeah, absolutely.
And
Absolutely. Yeah. I mean, even though I don't prepare returns, I was an accountant, I'm an accountant by nature. And that as Michael had said, that's a code section that's been on the books for a very long time. And now they kind of super accelerated it. You couldn't always take 100%. Usually it's like was a 3-year write-off. And now that helps the taxpayer save money in the now.
okay, how is bonus depreciation different from Section 179? And would a business use one versus the other, Michael?
Well, sometimes they have choices and it gets a little bit more complicated, but let's talk about the difference. The difference is this. Bonus depreciation does not have a hard dollar cap. Okay? It is 100% tax deductible, but it's not limited to 2.5 million. We have clients who buy $30 million of equipment and fully depreciate it using bonus depreciation because they just need that much. That's the main difference between the two. Now, up until One Big Beautiful Bill, that was limited to 40% of your purchase. So you had to make an adjustment. But with One Big Beautiful Bill, it was restored to 100%, effective this year.
Wow. And that's pretty impressive stuff. Why do you call these tools the business owner's secret weapon when it comes to taxes?
Because a lot of business owners use it. It is well known. Their CPAs know this. Okay. It's commonly known, but there's another audience that we're introducing this to. And these are people who don't have a business or they have different businesses and they don't realize that they could create something that generates these deductions, specifically an active single member LLC that they could own, that they could go into this program with.
Okay. What kind of purchases typically qualify for these deductions?
So our focus, and this is just our focus, other purchases will obviously qualify, but we work with construction rental equipment. That's what we do. There is a huge trend away from construction companies buying and owning their construction equipment to just renting it out, exactly like Airbnb. Instead of buying a vacation home, you just rent out a vacation home for the amount of time you need it. And when you're done, you leave. These construction companies will rent this equipment for a few hours, a few days, and they give it back, right? As opposed to what? Imagine buying the equipment, borrowing the money, having to buy a big space so you could have the equipment. And what happens if there's no business? That's a huge risk. Now they could just rent it and give it back.
Mike Velarde, have you heard about this before?
Yeah. Yeah.
I
And of
mean,
course, it makes sense. It certainly makes sense because from one, you're not taking the risk of laying out all your capital up front, and when you need it, it's available to you.
and that's meaning the people, their equipment,
Yeah.
that rent the equipment. Very interesting. Are there any limits or restrictions that business owners should be aware of? Mike?
Yes, yeah. So with Section 179, you can't create a loss. Okay. So what happens is if you purchase more than what you need that year, you will have to take the excess amount that would have created a loss and do what is called a net loss, net operating loss carry forward. So you could use it in future years if you'd like. That's the limitation there.
Can you give a simple example of how Section 179 or bonus depreciation could dramatically reduce someone's tax bill?
So yes, so I'm dealing with someone who is a successful engineer, not in the construction world. We had this conversation. He has $1 million tax liability every single year. Okay, he's in a state that has no income tax. So long story short, on $1 million in earnings, he's probably going to be paying about 370,000 in taxes, right? For his state is in Texas. Long story short, he can then, what I did was say, listen, consider this, set up a single member LLC. It will buy the equipment. It will borrow the money for the loan. Your out of pocket investment is 10%, which means if you need $1 million deduction, you're out of pocket for 100,000. Okay. Your 100,000 will essentially offset that 370 for that year. Now, here's what happens. You're getting $1 million write-off for that 100,000. So that's 10x in tax deductions. All right. And that equipment is not designed for you to just let it sit there. It will be rented out for you by one of the largest, it's actually the number 4 largest equipment rental companies, 330 locations all over the country. It's going to generate for you, on top of the tax savings, it's going to generate for you monthly rental income over and above the money that you borrow. All right. So your advantage and your risk are the same thing. Leverage. You're borrowing 90% of every transaction. So that's a good thing. But the other side of that sword is you're borrowing 90% of every transaction. On $1 million, that's 900,000. Be comfortable with that. You have to get approved for a commercial loan and you are personally liable. I like to make sure they know the risks and we're transparent. So here it is. Save the money in the tax, generate monthly cash flow positive, and at the end of year 6, they buy you out and buy it back from you for a specific percentage of the price that you already know day one, 56%. Now, there will be debt at the end of 6 years. You will pay it off. And when you're done paying it off, listen closely, you will have back your original principal plus, in his case, another 15,000 in his hands. Now, Michael will rightly say what? That's subject to taxation. That 560 he receives at the end of 6 years is subject to this thing called depreciation recapture, right? So what the government gives, the government takes away. So here's the offset to that. 95% of the clients will buy again to offset that taxable event. Okay, that's what 95% of the clients do. They know that day one before they ever buy this because I make it clear to them, you need an exit strategy. The other part is this, even if you don't buy again, you've significantly lowered your effective tax bill by doing this. So anyway, that's a long-winded answer to your question, but it really captures the program.
Mike Velarde, thoughts?
Look, Michael, could you talk a little bit more about the big beautiful bill and how it affected the corporate tax rates?
Not really. This I just focused on the areas that I work on, and this
Okay.
is the one that's most affected.
Okay. Okay. Because I think he lowered or he kept or the corporate rate lower. So going forward, you'll actually have a lower rate than a higher one.
Excellent. Excellent.
Right. I mean, until it expires.
You're
But
So
talking
just
about 21% for the businesses.
yeah, yeah, lowering that.
Yes.
Right. Yes.
And that's permanent for now.
Yeah. Yeah. Until we get a Democrat in there that might want to change it
Oh
and
boy.
say, yeah.
Here we go.
Yeah, exactly. I mean, but I'm just saying, but yeah, it's
Yes.
permanent for now. So I think let me ask you a question. What do you think this bill's going to do as far as revving up the economy? I mean, this is going to put a
I
lot more
really feel
money.
good about it, bottom
Yeah.
line, because now business owners have the ability to retain more of their hard-earned
Mm.
earnings, and that will result in more hiring. At the end of the
Yeah.
day, that's really what it comes down to.
Yes, right. It should be a big boon for the economy.
does that come
Yes,
effect in 2026 January?
it's effective, right? Now.
It's
It's effective
effective
now.
now, but in January 2026, when they start filing the returns, they'll be paying less taxes. And of course, that's the result of business owners putting more money in their pocket.
I see. So that's going to be interesting to see what happens in that process. But we're talking about, I was asking Mike Velarde, what do you think of what we're talking about today with
No,
the,
it's definitely an effective strategy. I mean, bonus depreciation in the section 179 is used very effectively to minimize taxes for business owners.
and now other people that don't know about this, Mike,
Right.
can do this. And this is where Michael August's bill with Rainstorm Group, program with Rainstorm Group is unreal because now people that are even Michael August explain even if you don't own a business, how you can be a part of this.
Yes, you could be a wage earner and
Mhm,
open up a single member LLC.
mhm.
Now, there are limitations to how much you could write off if your income is coming from wages and passive income. To get a little nerdy, that's called a 461 loss limitation. And that limitation for 2025 is 626,000 if you are married filing jointly. That means that you can use up to 626,000 in losses against your income this year. Again, it's if you're married filing jointly, it's half that amount if you are single.
Mike Velarde, as we're talking about today, is more of a, how winning tax solutions comes into place and all these different things. Do you feel that sometimes accountants are afraid to have these programs for business owners or individuals because of being audited? And then sometimes that's where you have to have the right corner of a team to make sure that everything is written well and done well and filed well.
Well, what's happened, Neil, to the IRS, going back to when I worked for 20 years ago, is there were bad tax preparers who would prepare taxes for the sole purpose of getting a larger percent of somebody's refund, and they'd falsify deductions. As a result, the criminal division of the IRS had a special unit, or we'd have to work X amount of cases to put those people out of business. And so what the IRS did is they made it a little tougher as far as rules and regulations for preparers with penalties, with sanctioning them, taking away their ability to prepare return because of those small group of bad apples who were totally in the business just to get bigger fees for themselves, and and in the process of getting refunds for their clients, they created bigger tax bills for them because the IRS would look at them and audit them, and then everybody who got that big refund had to pay it back.
Interesting. Now, Mike Velarde, you've heard about this for certain business owners, but you've not heard about it having the opportunity for many people to be involved in this program. Do you have
Yeah,
you?
yeah. Usually, like I said, it's business. I mean, his idea about a single member LLC, of course, is a good one. Um, and I think that the fact that they made it 100% is going to really help the business owner by putting more money in their pocket today. And that's what people need, more money in your pocket today.
Now, Michael August, this is a question to go dive a little deeper into the program. It was not 100% last year. When did this come to 100%?
That's correct. It came to 100% on the 4th of July when President Trump signed that bill. Here's how it was set up. A few years ago, bonus depreciation was 100, and then it went down to 80%. Last year was 60%. This year was 40% at the beginning. That means that if you bought equipment under bonus, you would have written off 40% of your total purchase, carried forward the rest of the write-offs. He brought it back to 100%. Big difference.
Wow. Okay. So that's probably one reason why Mike Velarde, I've not heard about this. I've heard about this program before, but it didn't seem as attractive. So this is where Mike Velarde, we need to get, I have somebody else to bring on the show that has more on the tax code and other things, not just certain programs, but more of an accountant side of things. Because really, we should look at all these things and say, okay, everyone's waiting for this economy to come back. I think what's going to have to happen is probably 2026 is when we're going to start seeing business owners with different budgets, because Michael August, they don't really come up with their year-end budget till the end of the year, right? So next year is when they'll know they have more money to invest in team, marketing, etc. Correct?
That sounds right. And unfortunately, some people don't know what their budget is even at the end of the year. And that's what costs them a lot of money.
Because they're paying too much in taxes.
Yeah, this is the time of year, and that's something we're gonna talk about in a future podcast very soon. What can you do to do that planning now so you don't get surprised?
Very good, great, and that's tease for Rainstorm Radio and $1 Million Minutes. Mike Velarde. This is the thing, I guess. Why isn't it that certain accountants know about these? Only certain accountants really want to even do tax strategy. What do you think the reason is, Mike?
Well, the reason is simple. They change them every year. I mean, like Michael just said, last year it was 40% and it Trump changed on the 4th of July to 100. So that means every year the tax code is different. They make changes to it. And honestly, it's hard to keep up. If you ever saw what the tax code looked like, I got it over there. I'm going to pull it just so you can see it.
It's about 75,000 pages, Neil. Nobody has mastered it. So, and some of us just mastered certain sections, and that's why we can do well in our areas of expertise. Look at that. Look at that.
That's the tax code.
So is that all in AI? That's my question. Is the whole code in ChatGPT or Grok or any of them, if you pulled certain sections to ask if it even could find it?
I don't know, but it changes every single year, Neil. And to keep up with it, you could spend a lifetime just trying to keep up with this code, in all honesty. I mean, when you get one and you look at the complete tax code and you could see the change they make every year in Congress, change this and that, it's ginormous. That's what you need, the software. That's why I don't do tax returns, because you need specific software that's programmed with everything in it.
So this is the secret I'll tell you. This is the same thing when it comes to marketing. Marketing changes every day. It's all about a scientific process. So if you're a great accountant, you're going to look at the tax strategy and look at how much I can save my client versus going and saying, oh, I'm just going to get paid for my hourly rate. So many people have to put more work in, more research in, become better at what they do, and education. So education is the key. And that's where Michael August and I talked and said, hey, I'm going to find some other ones. He has some other programs as well. By going where, Michael, people can go is just go ahead and DM me saying you were listening to the Mike Velarde show, or DM Michael on his social media and say, I was listening to the Mike Velarde show. I learned about this program. How can I get involved? Because and this is my call to action for every one of you listening live right now on also my networks, because I am live on my networks. If you are going to pay taxes this year, you need to give us a call, because we will be able to reduce or eliminate taxes. And through the programs and of Rainstorm and who they know, I'm telling you, they will. And Mike, that's the big promise, right? The more money you make, the more you can figure out things, right? Mike Velarde, isn't that true?
Oh yeah. Of course, of course, of
What is
course.
it? Mike, correct me if I'm wrong, but my understanding in research is that if you look at the top 25 earning Americans, their tax rate is at 6%. That's what I saw. Why?
Well,
Because, like there's a federal judge, learned hand. Now, Neil's heard this a few times. He was from the early 1900s. He said,
yes,
in America, there are two systems of taxation, one for the informed and one for the uninformed.
it's true.
Both are legal.
Right, that's
So
right.
these gazillionaires have access to top level advice in taxes
Right,
and they follow them.
right. That's exactly right. I mean that's the key is to use the code to benefit you.
All right.
That's the
Well,
key.
so last thing for Mike Velarde, show us your book so that Michael
Absolutely.
August can see it too.
There you go. See that unexpected assignment? It's a thriller. It's about the Secret Service agent that guards the Antichrist, based on the Book of Daniel, and
Wow.
it's really it's doing very very well. And matter of fact, Neil, I'm going to send you a trailer to share with people on it.
Okay, great.
Excellent.
All right,
As a
Mike.
believer, that's something that's of high interest to me.
All right.
You would love that book.
He's going to definitely
Love
check
it.
it out. All right, MikeVelarde.com. Appreciate it, guys. That was a special